the recent run in Bitcoin, to me, it's not so much about the ETF anymore. That's out there. I think there's still a lot of hype about it. It's partially about the halving coming up, but it's also about money. I do believe that we'll get down to that 3% handle, and then getting from 3 to 2 is always the toughest thing. If you look at the 10-year yield, right, the 10-year yield, the Fed funds rate's still at 5.25 to 5.5.
Wait a minute, everyone. Welcome to Bitcoinzilla, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoinzilla offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoinzilla. Subscribe now. In this video, Gareth will share his insights on how the Bitcoin ETF launch and a hype around it affected the price of Bitcoin, and why he was shorting Bitcoin at the upper boundary of a channel pattern on the chart. How the recent run in Bitcoin was driven by money flowing into risk assets, such as the stock market and the tech sector, and why he was concerned about the froth in the system and the social media behavior. How he compared the current inflation situation to the 1970s, and how he used his chart to show the cycles of inflation and interest rates. He also explained how the Fed's balance sheet and the U.S. deficit were influencing the inflation outlook. Let's join Gareth in this interview about these topics and more.
Sure. So we had the ETF launch, and that hype, again, hype is hype. Whether it's in Bitcoin, whether it's in NVIDIA, whether it's in any of these things, it drives it to these crazy levels, overbought, and then you get kind of the sell the news event. And that's exactly what we saw in that. I happened to be short at that time. We got out just around this, just below 39,000 down here. And the beautiful thing about this is it created this, look at this channel. You have the highs here connected to these highs and this low connected to these lows. And look at what we just hit on Bitcoin. So believe it or not, I initiated a new short just up here, very small position, just to kind of a dipping the toe in the water type thing. But again, the idea being is we'll see a pullback off of this. And now the recent run in Bitcoin, to me, it's not so much about the ETF anymore. That's out there. I think there's still a lot of hype about it. It's partially about the halving coming up, but it's also about money, right? It's about risk assets. When you see SMCI going up hundreds of percentage points in a couple of weeks, when you see NVIDIA doing what it's doing and the tech sector doing what it's doing, money is going to find other risk assets to participate. And I think that's what's driven up Bitcoin recently. Now, is there fundamental long-term reasons to be long Bitcoin? Absolutely. But again, my thesis is that if we see a 20-30% correction in Bitcoin, in the stock market, which would be kind of run-of-your-mill after the Nasdaq's up, 60% since October of 2022, you then have to talk about Bitcoin possibly coming back to 30 to 32,000 on the charts.
Well, wait a minute. So same question as the S&P, right? Just fundamentally, basically speaking, someone's looking at that chart and says to you, it's obvious we're in a bull rally, or it has been in a bull rally. How can you still be bearish? How would you respond to that?
Well, I think the kicker is this, right? Is that I'm a trader, so number one. So again, right here, I have a trend line. I short it. I buy support. If it comes down to the lower level, we'll buy support as well. But I think my point is this, is that when you look at the kind of the froth in the system, and right. Remember what I said earlier in this interview, folks, it's one of the biggest calls I'm known for of nailing the Bitcoin top at 69,000 is that when I see social media behaving like it is behaving, it is exactly like that in stocks, not so much in crypto, but in stocks in particular, as those same indicators back then. And that is a warning sign of, the people saying, hey, you could just close your eyes and throw a dart at a dartboard and you'll get a winning stock and you'll make money. And that's a concern to me. So I do think we're kind of coming into a risk-off environment. How big of a pullback? I don't know. But I do think on that, Bitcoin will just sell off just naturally as a risk asset.
Okay, so when there's a lot of hype, generally that's when things get frothy. Be prepared to sell. Can the reverse be applied? So I'll give you an example. Last year, you and I both attended the Bitcoin Miami conference. Attendance was slow. I think that may even be an understatement. It was a very quiet conference. Not a lot of people there. Not a lot of exhibitors there either compared to the previous year. When you look at a situation like that, do you think it's time to buy?
Yeah. Absolutely. They, again, I wouldn't call it blood in the streets back then, but that's the idea, right? When there's blood in the streets, you buy. When the pizza guy is telling you the next stock tip, that's when you're supposed to sell, right? That's the old Wall Street adage. And it's very, very true is that, you have fundamentally something like Bitcoin, 21 million will only be in existence. So longer term, I think it performs really, really well. But again, for me, I look at shorter term time frames, and right now we're kind of in the frothy zone, mainly on the stock market. But I think with the stock market pulling back, Bitcoin likely would get a pullback here as well.
Do you think Bitcoin will reach its previous all-time high before a pullback?
I don't think so. I personally don't think so. I think that there's so much money that got burned in 2021 that unless this stock market continues up for another 10 to 20%, then probably we don't do that. And I don't think the stock market has another 10 to 20% before a bigger corrective move of at least 10% to the downside here. Now, again, I will be a buyer. Right now, my major line in the sand is that 30 to 32,000 level. So if we can retrace there, I'll start accumulating pretty heavily on the Bitcoin chart.
The chief executive of Sound Planning Group has predicted a major Bitcoin price surge, stating that the crypto is priced for a serious rally. He identified the upcoming Bitcoin halving and the adoption of spot Bitcoin exchange-traded funds, ETF, as key factors driving his bullish prediction for the cryptocurrency's price. The financial advisor believes that Bitcoin is a real asset class that will have a lot of value. BlackRock has amassed nearly 110,000 Bitcoins for its spot Bitcoin exchange-traded fund, ETF. It shares Bitcoin Trust, IBIT, since its launch about a month ago. The world's largest asset manager's Bitcoin ETF has a total net inflow of nearly $5 billion. Leading the pack among all spot Bitcoin ETF, BlackRock CEO Larry Fink has stated that he is now a big Bitcoin believer. A Federal Reserve governor has addressed crypto's impact on the U.S. dollar's dominance. Additionally, he expressed reservations about the need for a U.S. central bank digital currency, CBDC, and stated his opposition to banks holding Bitcoin exchange-traded funds, ETF, as their primary asset.
I do believe that we'll get down to that 3% handle, and then getting from 3 to 2 is always the toughest thing. And I continue to see the reminiscences of what happened in the 1970s. And in fact, I can show my chart right here and we can just kind of take a look at it. But basically what we see here is this was the 1970s, and you had that initial uptick, and then the Fed obviously kind of stepped aside and inflation came down. And then we had another wave of inflation went higher. The same thing pulled back. We had another wave higher as well. And then finally it got back under control. And I really think that, as much as the Fed has said they don't want to repeat what Volcker did, if you look at the 10-year yield, right, the 10-year yield, the Fed funds rate's still at 5.25 to 5.5, yet interest rates on the 10-year are back to the 4-ish% level. In fact, we were below 4. So you've seen those interest rates come back down even without the Fed lowering rates. And what that does is it starts to initiate inflation again. It starts to kickstart that inflation because borrowing money is getting cheaper again. And I think you have to look at many things, right? So just a couple things I want to point out is that, you've seen the balance sheet of the Federal Reserve drop just a little bit. It was $9 trillion. It's down to $7.5 trillion. So the Fed has kind of started to contract that a little bit. But the kicker is if you look at all these auto loans, credit card debt, U.S. public debt, they're all surging to the upside. And so that's making up tenfold the amount of the pullback in the balance sheet. And again, just to show you in comparison, this is the pullback here, right? This is where we were. We were trading around $9 trillion. They've only been able to reduce their balance sheet to about $7.5 trillion. And that's while the U.S. deficit has risen multiples of that over just the couple years, right? So again, my point being is that when it comes down to it, you're in a scenario where the Fed, they've tried to tighten, but the market has actually loosened. And then you talk about the extra money in the system from credit card debt to auto loans to the U.S. deficit, and it really hasn't been that tight. And I think that's probably why the stock market is at all-time highs as well.
If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.